folks, this is Vic with your weekly trade video. And today's topic is about one of the most important and foundational aspects of how we trade and how Darko, our lead coach, has been able to produce consistently profitable results since 2017 when he became our lead coach. Actually, I should back that up. It's been since 2016 because I was watching his live account back in 2016. So it's been coming up on 6 years now of this consistent profitability. You don't get that kind of consistency by fluke. Okay, our trading completely revolves around the identification of strong levels of support and resistance. This video that you're going to see is actually one of the videos in our new member quick start guide that we use for both our longer term and short term trading services. And you're going to hear Darko explaining exactly what levels we use, the candle action that we look for, and why. Once those are identified, then we can structure high probability, low risk trades. Okay, so be sure to give this video a thumbs up if you like it, and I sure hope you do. And be sure to subscribe to our channel by clicking the button in the lower right corner of the video. Alrighty, let's have a look.
Hi everyone, Darko here, and welcome to today's price action reading school. In today's session I will talk about something that's very, very important. I would say this is by far top 5 most important subject in trading, and that is how to draw support and resistance lines and where and how to look for what we call for significant necklines. Okay, because when you look at your charts, there are necklines everywhere to a point where you get feel dizzy. So if you don't know where to look for trades, you will be taking trades at random levels. It might be a neckline or a support and resistance line, which is completely like a useless level, and then you lose those trades, and then you lose faith, and as a stage 1, 2, 3 trader, you start jumping system. Okay, so in today's session I will tell you the most important aspects of how to look for these. First of all, I will show you some drawings, and then I will show you some screenshots of live charts, and then we will end this session by watching one pair, maybe 2, depends how long this session gets. And then obviously I'm showing you legit levels in my PMAs almost every day, so, or at least when I have those PMAs and when we have a valid trading level. So this is something that we use every day, so this is nothing new. Okay, so what I look for is, and this is super important, so make sure that you write down these steps. What I look for first and foremost, the best trading level is 100% bullish candle followed by 100% bearish candle with no wicks. And let me ask you this, how many of these do you see on your charting? Basically very few of them. Okay, and this is the absolute best level. Okay, there is nothing that is in comparison with what call a Morobuzu candle. That means a candle with no wicks. Okay, followed by another candle, an opposite candle than the first one, and this is for resistance, right? We need a very bullish candle followed by a very bearish candle. Okay, now then we have a neckline, and that neckline becomes resistance if price is dealing below it. Okay, and obviously if this level gets breached, doesn't mean that this level is useless. This is one of the most common misconceptions a trader have. Like, just because a level doesn't hold doesn't mean it's useless. It just means there was, in this case, might be a buying pressure, and I will talk about that price action, about how to identify trend, because if you don't have a bias, then every level you are trading is a gambling, because you don't know if we have buying pressure or selling pressure. So even though if price is dealing below this level, if it's buying pressure, then it's better to wait for a breakout long or a pattern long than shorting. So this session is not about bias, so let me just focus about support and resistance. The second good one is when you have a very, very bullish candle followed by a very, very bearish candle, and there are some wicks involved. Okay, and the worst thing you can do in identifying support and resistance is when you are trading neutral levels. That means you have a neutral candle action followed by another neutral candle action, where there is like no conviction. You have to ask yourself that if I ask 100 traders, will all of them, every single one of them, say that this is a 100% bullish candle, and this is a 100% bearish candle? They will do that because this is a very bullish candle and a very bearish candle. Okay, so, and this is another example where both have wicks. It could be above or under. There are like wicks involved, and I'm trying to pick levels where there is as little wicks as humanly possible. Okay, and this is an example of a neutral neckline. Okay, so these are the levels where you might get a pattern, but there is no strong level, and that happens when you are for a lack of better word, when you are like desperate, so eager to pull the trigger, you are like addicted to trading, and you need to do something, and you are forcing a trade, and you are forcing a level, and then it doesn't it don't work out, and you start blaming the system. And also something that you need to watch very carefully is the least time we spend at that neckline, that the better that level is. That means I like when price is heavily coming down, builds up a neckline, super strong neckline, and heavily moves up as a swing, a V-shaped or an inverted V-shaped. The second good one I couldn't draw. Let me just do the drawing for you in here. A U-shaped, okay, or an inverted U-shape. Okay, so this is the last. This is the first good one. This is the second good one. Okay, so when price is basically coming down and then just ranging like this and then do this, these levels are completely useless. It just don't use those levels. Price needs to be, it's just like when you put your fingers in a hot pan, you just move it right away. And this is how I want price, my necklines be like, super quick touch and then bounce. Where then at some point when price comes down to these levels, those are golden. Even if we breach it, those are golden for an opposing, like for in this case, first and foremost looking for a longer opportunity if price is dealing below, above, or if price having a selling pressure and you are waiting for price to breach that level, then this becomes a super level for a potential shorting opportunity. So this is super, and this is one of the biggest mistakes we do, is that we wait for like levels that is not valid. Okay, let me see here. So let me show you now tons of examples of necklines, and we will just talk around it. Levels like this neckline up in here, that's golden. Like if you just wait for levels like this, you'll be in good hands. And whatever pattern you are trading, it doesn't need to be those three patterns that I'm trading. It could be anything you are trading. Once you know how to draw support and resistance, you can be trading anything you want. Okay, because the levels are legit, and this is one of the levels that I'm showing you that is super important. Why? Because this is a 100% bullish candle followed by a 100% bearish candle. It's barely any wicks, like some little wicks in here, and that is in the beginning of the candle, not at the end of the candle. Okay, and if you have gaps on your chart, like let's say that you are trading stocks or something, you always mark the closing price of the bullish candle for resistance. Okay, let me repeat that again. If you have gaps, like you trade stocks, and this candle opens up in here or very below, you mark the closing price of the bullish candle action, okay, for resistance, the opposite for support. So this is a great level to be watching for. So now you have like a neckline in here, you have a neckline in here, you have a neckline in here, you have three necklines. So if you had to choose a wild guess which one of these three will be the best, or is the best based on the probability game, well, this one in here. Okay, why? Price drops very quickly, bearish, super bearish, super bearish, neckline, super bullish. Okay, we jumped right back at the opposite level. This one in here is bearish candle neckline. This is also a bearish candle neckline. Unless it's a super huge swing, neckline, well, I just skipped that level. Okay, that's super important. Here are 4 different necklines. Okay, this one in here, very good level, another good level. This is the best level. Why? Because there are no wicks. These are wicks. Okay, this one in here is bullish followed by a bullish candle action, and then we drop. So if it wasn't for this drop, I wouldn't care about this level. Okay, so there must be some action, something is happening. Okay, and that's what dictates a good level, a great level. This level is good, a very good level, very bullish followed by a very bearish. We dropped, and now we have bullish. I'm taking this level as a great level, as this one is because it was a swing neckline, a very small V-shaped neckline, and price went down and then in a hurry left that area. We are not ranging before leaving. Okay, that's super important. And don't worry about, with this level it didn't hold, or don't worry about that part of trading, because that's something else that I will be covering in my future price action reading. So just stick with me. Okay, this is another level with super bullish followed by super bearish, followed by super bullish. Okay, those are great levels. Same in here, price is coming down, very bearish candle action followed by very strong upward move. Those are usually very great levels to be trading around. Same in here, very bullish followed by very bearish. And yes, we have some wicks, and if I had to choose between the wicks, like if I had to choose between, if I have this wicks in this candle instead of this candle, I prefer that. That has more about consuming orders, hidden orders in the market, etc., etc. And that's more like super advanced trading. We cover that later on at some point. So let's just move on. Like this level in here, I prefer the wicks to be on this end, and the second candle I prefer to be lower wicks than the previous one. Okay, and then in this case we have a huge drop. Okay? And that's level like this, especially on your higher time frame. Like if this is a weekly chart and this is also identical with the daily chart and you are trading in alignment with the trend, these are the golden opportunities. Okay, even if you are trading against the trend, the trade management dictates the rules, obviously. Same in here, you have neckline. I wouldn't care a bit about this neckline. Bearish or bearish neutral. This is bearish. This one in here is bearish followed by a very bullish move. Okay, that's super important, and price did not spend as many time in here as it did around this level. Okay, same in here. I took a screenshot of several necklines. This one in here is, I would say I wouldn't care much because there's no swing. It's bearish, and there's like no heavy drop. This one, that's a great level. Why? Because the second candle, there's barely any wicks. Okay, like if this looked like, let me just grab my pen for you. Like in this candle, the wicks are something like this. Well, the higher the wicks, the more the wicks we have, the less I like that level. Because the reason for it, because we are trading hidden orders in the market. That's something that nobody talks about. There are levels, like selling levels in the market that you don't see. That is putting by the institutional traders. When you have a wicks like this, well, price already consumed so many orders. So next time we touch that level, and yes, you might say, but Darko, we held it in this one. Don't worry about one screenshot. I'm talking about, if you take one of these levels 100 times, you need to have an edge. And by having a wicks, all of these orders are could be consumed. We don't know. When price gets back into this level, now you are sitting and hoping for price to hold that level. But when there are no wicks, we know that this level was, price dropped heavily, and the orders around this level are, they are still there. They usually are there. So, and therefore we wait for a monthly candle action or a weekly candle action. When let's say that, or just skip that. I will just take that part in another session. I will just focus on support and resistance. So this level is, I wouldn't take it. This is a great level, another great level. Okay, this is a bullish candle followed by a neutral bearish. There is a move in here that could, make price to hold that level slightly, but I wouldn't say it's a perfect strong level. Okay, a very bullish candle action followed by a very high volatility candle action. Levels like this are almost always great. Okay, in here we have a swing neckline. I wouldn't say that this is like convincingly dropping. Okay, it's like we are taking ourselves down. It's nonetheless a swing neckline. So yes, it's an okay level, but it is nonetheless bearish wicks. Then this candle was dropped bearishly, and then the next one was not that convincing. If you compare this level with this level, that's a different story. Okay, this level is the same in here, very bullish, then bullish, bearish. So this neckline, I wouldn't put my money behind it. So same in here, price is just moving around. We have a heavy drop, but the heavy drop comes in here, not at the top. Okay, this is an example of where price is ranging before dropping, and this is where the U shape might come in. And this is like let me just grab my pen for you again. Let's see, where's my cursor? Give me one sec. So the U-shaped is more like this. Okay, this is more going this. So I would say no. Okay, this is a great level, great level. This is another great level, etc. Okay, same in here. This is a bullish candle action, and this is also a bullish candle action, or maybe a neutral candle action. Would this neckline be important? No, this is neutral to bearish, and this is bearish to bearish. So, and this is where you need to focus on the ones that I'm showing you in my previous slides. And then there are levels. It's not a significant neckline, it's a significant level because there are confluences of necklines at or very close to that level. In this case, we have like 1, 2, 3, 4 necklines basically at the same level. Okay, and now you need to look, okay, this neckline, is this a legit neckline? Yes, a very bullish candle followed by a very bearish candle. Same in here. This one is more neutral to bullish, this one is neutral to bullish. So I would say this one dictates the rules for the next coming ones. Okay, same in here. This is another example of when you have several necklines at one level, which makes that level even stronger. Okay, let's just move on. We have some, this is a weekly chart and a daily chart, and you see how the black circled necklines are also identical to the pip. Okay, when I say identical neckline, it's to the pip. And yes, there are times when they are like divergent slightly. And now if you are at stage 1, 2, 3, just like, what is slightly? Slightly is subjective. Well, it depends if it's a high volatility pair or low volatility pair. I would say a couple of pips, 3, 4, 5, 6 pips is okay. But let's say that you have like 20 pips divergence, that's not identical necklines. Okay, so just make it simple, don't make it into rocket science. There's another great level when price is showing you support became resistance, like legitimately resistance, and that becomes support. Great levels. So these are significant levels, but not necessarily significant one significant neckline. It's like several necklines. Okay, so a level like this, you have first of all one neckline up and you have one neckline down. Levels like this in the middle of nowhere, those are not tradable. Don't even look at these levels. Okay, same in here. It just, price is bullish, neutral. This is bearish, neutral. This is bearish. These, like this neckline up in here where I have my cursor, and the lower one in here, these are not tradable necklines. It's a different story when it's a swing neckline than like the lower one. Okay, so these are the difference between, you know, great levels and less great levels. So I'm just picking the first level on my radar, because here's the thing, and this is Aussie CAD, and the thing is that when you look at your daily chart like this, and this is a common for a daily chart, there are necklines all over the place. Like you get dizzy, just geez, like which one do I focus on? Do I focus on, is this neckline important? Is this neckline important? This one in here, maybe this one in here, or this one, this one, this one, this one. You know, there are like levels everywhere. Once you have your bias, which I will talk about later on, start always with the weekly chart. And start, where is the latest candle? Where are we right now? And then you go backward candle by candle until you hit something very, very legit. Okay? Sometimes people like send me a screenshot like, hey, you know, I have a candle in here, a neckline. I took a trade. Like, why? What makes you think that price over here will care about a neckline, like even a non-significant neckline back in here? That's just nothing. Don't waste your time. You can go far back, yes, but then that level is like untested, fresh, or maybe it's a tested level but respected level. That's a different story. So just keep it like super simple, super easy for yourself. Take it candle by candle. I really, really like this level, which is also identical with the daily line. I really like this level in here. Okay, I like this level in here. And there are like other levels in here that is legit as well. I don't want to make this session too long to lose your focus. Start with the weekly chart, mark these levels, see if those levels are also identical with the daily. Those levels are golden. If it's not identical with the daily, then you look for these candle action combinations on the weekly charts only. Then you wait for a bigger swings on your hourly chart. Or there are times when you have a standalone level that is only on your daily chart but not on your weekly chart. It needs to be those candle combinations that I went through. Once you find those, then those are also tradable on your hourly chart. Hope you enjoyed this session. The rest of it, we will be practicing this on daily basis in the PMAs. Thank you so much for listening and have a great day. Cheers.
So I hope you got some good ideas from this video. Now, of course, identifying strong levels of support resistance is just one component of a successful trading approach, but it's a super important one. And when we put this information together with trend bias and market structure, etc., risk management, all that kind of stuff, that's how we come up with a strong trading plan that's very, very objective. And again, we identify these levels for you in advance in the videos that we provide for our clients in our service. So there you go. Thanks so much for watching. I hope you all have a great weekend. All the best.